Hello traders, this is William, aka the Architect. Um, Thank you for joining us and thank you for giving us a shot at helping you become a better trader, which is really our ultimate goal. I wanted to do a quick tutorial on how to set up and follow these trade alerts because what I'm about to show you is actually pretty damn fantastic. Um, so you get the alert, you have the call trigger here. First ever arrow. Call trigger there at 89.50. Then we'll give you targets. First target, second target, whatever targets we can see that are in range within the next couple of weeks, that's what we'll give you. And then you've got the put target here. So if we close this out and bring this up, this is actually the chart that was included with the alert. Now we won't be doing these with the charts on a regular basis because it just takes too much time away from other things that I need to work on. But with some of our more premium programs, we'll get into all of this stuff. And then I want to show you how it played out. This was where we ended on the 16th. This is when the alert went out. You can see that we opened here under our put trigger. Oh, hang on. So in the open, it immediately fell to our first target. And if you are following along, how I say you want to wait for the first hour bar. Once the first hour bar closes below your put trigger, you're good to go. So you could have gotten in right here, or even up here, depending on how you played it. The close right here at 86.69. And you would have gotten within 50 cents of the first target within the first 2 hours of the day. And then, of course, we came back up here later to where our put trigger was. Our failure to break through that could have given you a signal that we might be going short. And this one right here would have been where I entered when we closed below this first target. I wouldn't have played this. That's just not the way that I set it up. But you could have if you're playing on a shorter time frame. If you're playing a 5-minute time frame or a 15-minute time frame, then after you got down here, this would have been your signal to get out, just below 86. I prefer selling into strength. So if I were playing a short one, then I probably would have gotten out probably relatively quickly. That's not much of a move. But with a short-term options contract, a dollar move on an $86 stock, I don't know what the actual option stats are just looking at this, but that could have been a really nice little short, quick move. When you get up here, you can see this rejection bar. Here. Come on. What the hell? Okay. Well, you see this area of rejection right here? You would have been watching for a downside move. I wouldn't have done that. Let's go back out because I just want to tell you what I would have done. I don't think we took this one, but we took this one right here into the close of the day, even though it came up and then came back down. Once we're in an option trade, because we price it to where we can lose everything. Once we're in it until we get to our next target. So you could have closed. Let's see if I can get this stupid thing to work. He's a pain in the ass. Right here. So we would have bought halfway. We got 85, 82.50. Probably would have bought the 83 strike, and then closed it out the next morning when we got to our second target. So all of this pullback that happened would not have mattered. Because we're looking at the hourly chart, we ignore this one because it didn't get close enough to either one to really count for anything. Here, you can see the high of this one was 84.90. To me, that counts. So my next move, the next thing that I'm looking at is for a close on the hourly chart above or below this bar. Once you get that, then you're signaled back to the line that you just came from if you're looking for a reversal. If it closed above this, then it would crack this first target line and we could play it back up to 87.50. So when we came down here, you see how close this previously stated target is to almost exactly where this rejected. So this green bar right here would have let me know that we're probably going to go back up. This would have confirmed it, and I probably would have gotten in, even though this part never followed through. We don't get stopped out because, again, we're pricing our options to allow us to lose all of it. That way, you don't have to think about it. The emotions in trading are what's going to kill you the quickest, and the way that I'm trying to set this up for y'all is so that you don't ever have to worry about your emotions. You get in the trade, it's either going to hit or it's not, and then you get out. You don't have to think about it. You don't have to wonder about it. So we're in here. This disappointed us. You could have gotten a second entry here, but I don't typically do that. If I enter here, then I might hold a few through this line depending on how many contracts I could get at the time, and we will get into that further down the road. But right now I'm just trying to show you how you can use these basically forever to give you trading zones. You can see how insane, come on, how close these come to stopping in the same areas. So you can continually use these. When you get your long here, this disappoints, but you don't get stopped out. You could add another entry right here, Friday morning, and then probably close it out. I'd probably close everything out right here. Although this is a pretty strong move. If you look at it on the daily, I bet it's a good speculative trade. This right here, that's pretty strong. That's a pretty strong close into this consolidation. Increasing volume. This is the only thing that I look at, so I probably couldn't have traded it. But who knows? Either way, I would have made this profit on this day. Would have been huge. That's a $4, a $2 move. What, 3%? That's a big deal. Of course, you miss all this. It would have been major to hold it through here. And when you get to a larger account size to where you can buy more options, more contracts, then you'll be able to play that too. But when you're first starting out, sell into the first target. Take your profits, get out of it, and then look for the next trade using the same levels that are indicated. If you close this out, yes, you would have been disappointed on Monday, but when you saw this move up right here, then you could have entered long to get into the rest of this trade for the rest of the week. You could have entered again long here to get into this trade for the rest of the week. Of course, this right here would have signaled you to go short, so that would have been a losing trade. But if you look at how often the trades are winners, that's why we price them, so we don't have to think about it. We don't have to worry about it. We can get in, get to target, or die trying. And ultimately, the success rate is going to make up for the loss rate. But that comes down to account management and what I call risk theory. And we'll get into that as we get deeper into this. So just keep an eye out. Damn. When you get these signals, when you get these triggers, keep an eye out for when they break. That way, you're ready to go. We are in this trade up to 91.50, and we're actually strong enough in this one to justify holding it until we get to the 95-second target. So I'm holding Starbucks until I get to 95. I think it'll be this week. If it's not, then I'm risking it all to believe that it'll happen next week. So happy trading, guys, and I hope this is helpful. If it's not, hit me up in the Discord and we'll start building a workshop around this type of lesson. That way you guys can get a little bit deeper involved in what I'm talking about. Okay? Thanks.